When you look at the US dollar versus the major currency pairs, the dollar is down against each of them, but it's down the least versus the Aussie versus US dollar. Currently, the US dollar is down around 0.5% versus the Aussie dollar. That compares to, let's say, the Swiss franc, which is down minus 2.43%, or the Japanese yen, where the dollar is down minus 1.92%. So you see the relative lack of movement to the downside versus the Aussie versus US dollar. Some technicals came into play that have limited the upside move in that currency pair, the lower dollar. I'll go through that in this video and explain what key support levels are in play as well. So let's get started. Like a lot of different currency pairs coming into the tariffs, there was a large up and down price action that has occurred, and that price action has helped to bring the moving averages in play and converged here. You can see that the 100 and 200 bar moving average in the 4-hour chart are virtually the same at 0.6305. The 100-day moving average is also moving down toward that level, currently at 0.63. Looks like 169. So about 11 pips is the difference between those moving averages, all that cluster of moving averages. And when in trading here today with the tariffs, we saw the dollar move lower, and this price ultimately moved above those cluster of moving averages right through here. We saw increased momentum, got above this swing area through here, and then the move to the upside came up to this level right here, which was 0.6390. That happened to correspond with the high price, not from last week, but the week before on this 4-hour chart. And we found willing sellers against that level. And where do we run that back down to? Back down toward the swing level here, back down toward our moving averages through here. So this area right through here between 0.6305 and 0.6336 is going to be the key barometer of not only today, but going forward for this currency pair, as long as the price can remain above it. I won't necessarily say the buyers are winning, but they're still in the game. The reason why they're not winning is because this high price right here couldn't get above the high price here. We couldn't even get to the 38.2% retracement of this move to the downside from the September high down to the low price that we saw at the end of January, early March, or February. So that limits the my saying that the buyers are in control. Nevertheless, if we stay above this level, they're still in play. And if they do bounce off that level, then they would have a little bit more control in the short term. But they do ultimately need to get above 38.2% retracement to prove that fact. So that's my look at the Aussie versus US dollar from a technical perspective. Again, it's one of the least, or one of the pairs that has moved the least against the dollar. That's may keep the sellers in play and put the pressure on the buyers to show that they can prove more. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.